has grown rapidly in London, the Middle East, and Asia, but it's still a very small segment of global banking. Is that set to change? Here in Singapore, I'm Linda Yueh, and we're talking business. A warm welcome to the program. Islamic finance is bank lending on the basis of Sharia law, so earning interest is forbidden. Instead, loans are made on the basis of risk sharing, so the customer and the bank divide the risk of any investment and then share the profits. Our Middle East business correspondent, Mark Lobel, went to find out why it's growing so quickly. It's a fast-growing industry, but still comprises a small fraction of global banking. I caught up with Adnan Yusuf, President and Chief Executive of Al Baraka Banking Group, one of the largest Saudi conglomerates in the Middle East, to find out why and what the potential for growth is.
Islamic banking has been in operation for just 40 years, and although that they grow very fast in the 40 years, but still they have a long time to grow and to expand. We cannot compare ourselves to the traditional banks. They have been in existing for over 300 years. So therefore, that they built the infrastructure, they build their systems. Now the total balance sheets of the Islamic banking is close to about $1.5 trillion, which is not that big in the banking sector, but it's not also that small.
What's caused the rapid growth? Because there has been really fast expansion of the sector over the past few years.
Well, the growth because of two reasons. First of all, that their previous years, they used to be small, and then suddenly they start growing. Countries which they are operating in also show a very good growth, especially in the Middle East. But therefore, that these two reasons has pushed the Islamic banking ahead. Still, they have continued with the 15% growth. I don't anticipate that this ratio will be increased or will stay. It might go between 10 to 12% in the coming 3 or 4 years.
That's still very fast growth for a sector to expand by double digits.
Yes.
That means the sector will double in size in, say, 7 years.
Yes.
Is the growth predominantly because in the Middle East, or is it other markets which are outside of the Middle East, where you're beginning to see the kind of real drivers?
No, it is outside also the Middle East. Now we have Indonesia, we have Malaysia, we have Singapore. They are opening their doors for the Islamic banking. We have now China also is coming up, India is coming up. So all these countries are growing, and also that their banking activities is growing, whether it is Islamic or non-Islamic.
Is it also because in the West there's been a massive banking crisis, so there's perhaps a turning away from some Western banks?
I think that no, that is not the reason for the growing of the Islamic banking. Islamic banking has not been hit with the crisis because also that we avoid going through a lot of things which has been followed by the traditional bank. One of them was the derivatives.
But is there something about Islamic finance that makes it harder to grow that quickly? Because you are more limited in what you can innovate around. You have to be compliant with Sharia law, for instance, whereas other bankers could do...
No, I think that, normally, most of the banking, they grow where their countries are growing. We anticipate that the growth will be there. And as I say that, we cannot grow very fast. One of the big mistakes sometimes, banks they do is they grow very fast. They don't learn from their mistakes, and then they repeat the same mistakes. We don't want to do that.
It sounds to me like it's a more conservative banking model, something as sort of the kind of careful expansion. If that is the case, do you not pay huge bonuses either?
We don't pay huge bonuses. They don't pay huge bonuses for me as a president and chief executive, but bonus should be reasonable, because also that that we don't want to do, or we don't want to repeat the same mistakes. Big institution, they were offering their senior staff big bonuses without looking to the risk associated with the growth of their balance sheet or with the growth of their profits. So therefore, that reasonable amount better than, big amount, but, creating something, bad to the institution you are, working with.
What's a reasonable amount?
Well, a reasonable amount is reasonable to your balance sheet, reasonable to your profit and loss accounts, and reasonable to the standard in your countries. Okay, maybe 1 million in Singapore is reasonable. Maybe if you take it to America, it is not reasonable because the market is big, the growth is big, the balance sheet is big. Therefore, that you have also to see which market you are operating in.
One of the things that people find interesting about Islamic banks is that it appeals to non-Muslims as well.
Yes.
Why do you think that might be the case?
Well, I think that Islamic banking, from us, from Al Baraka, we have a few institutions or a few units. We have Christians dealing with us more than the Muslims. I remember that one of our subsidiaries, which we opened at new recently, the new shareholders who came and participate as the new shareholders, was Christians. Islamic is not just for Muslims; it is for everybody. Everybody who believe in that kind of business, he is welcome, whether he is Muslim or Christians or others.
You're part of a big conglomerate.
Yes.
Within the business structure of Al Baraka, how important is banking relative to the other sectors? And is it the growth sector?
It is the growth sector. It is a big sector compared to the other. And as I said, that we are growing. We are trying to grow, not that fast, but we are growing very fast to enable us to capture the new business for the whole group.
Some people look at banking and think, is this really where you want to put your main business, given
Yes.
all of the regulation and issues that have come up? But for your group, is this the main thrust of what you do?
Well, I think that yes, you are right, but we have to work in that environment. You cannot be completely isolated or out of control. We have to work within the regulation, within the environment in every country, in every kind of areas which we are working. We have to respect also the regulations.
Globally, the Gulf region accounts for the bulk of the Islamic finance industry, but Malaysia, Singapore, and London are among the centers where this industry is growing. Non-Muslim countries are also aiming to get a piece of this fast-growing market with untapped potential. For instance, 80% of Islamic finance assets are in the Middle East, which makes up just 6% of the Muslim population. I caught up with Ijal Alvi, the CEO of International Islamic Financial Market, an international standard-setting body based in Bahrain, to find out how global the industry could become.
UAE has taken a very active role. UAE, the first Islamic bank, actually was established after Islamic Development Bank in 1975 was Dubai Islamic Bank. Then we have Saudi Arabia, which has now come quite a bit, both in the banking side and capital market side. We have Qatar, which has, and then we now recently Oman itself also started. So these countries have been active, and then now other countries like in North Africa, they are sort of at the development phase. Egypt is also looking at it, but I think it will take time. But then you have Tunisia, which is now looking at it. You have Morocco, which is looking at it, and other countries. So these are sort of evolved.
So if you wanted to offer derivative product, these complicated financial products, which essentially sell a tranche of returns on top of a bundle of mortgages, for instance, is that something which is developing?
No, Islamic finance, one has to be very clear. Of course, there are certain good products in conventional also. So not all are speculative in nature, and they are. But certain derivatives are, speculative in nature. On this subject, we worked for last 6-7 years, and we have developed some standard documentation. Here, the key sort of requirement in Islamic is really for this segment, and we call it hedging. So to differentiate between the derivative world, which has many products are there structured. Main thing is that it is the risk mitigation here. So it's not really that you're going to do and what is the purpose. If Sharia, they want to see the purpose. That, okay, why you're going to have this product.
One of the places where Islamic finance is expanding is Africa. There is a significant Muslim population, but Islamic banking is drawing in both Muslims and non-Muslims. Abu Bakr Famu has this report from Tanzania.
For centuries, Zanzibar Island has been home to a large Muslim community, and today, almost 99% of the island's inhabitants adhere strongly to Islam. And among the teachings of its holy book, the Quran, followers are prohibited from borrowing money that comes with interest. As a result, a large number of Muslims shun the financial services that are offered by conventional banks for fear they don't comply with their religion. Now, several conventional banks have opened doors for Islamic banking. It is all part of the effort to meet the needs of this growing market. According to experts, Islamic banking adheres strictly to Sharia law, so that both the customer and the bank must share the risk, unlike other conventional banks where customers bear the full risk and therefore full cost of the loan through interest payments. The services offered by Islamic banks often use real assets such as buildings as collateral, whereas conventional banks use both real assets and virtual assets.
Two things made me come to this service. One is my faith, because I'm working with this system free of worries about doing things contrary to God's instructions. Secondly, I benefit from business transactions with this system because I find that I pay fewer compared to the conventional system.
Almost a decade ago, some of these banks had a humble start with a few customers. But now, some have more than 36,000 customers with estimated assets of $3,600,000 US. While their financial products have certain requirements, Islamic banks do not require their clients to be Muslims.
We're targeting everyone. We do not target Muslims only. For instance, in our branches we have several non-Muslim clients. And it's not here only, even in countries like Malaysia, where these services are being offered. Statistics show that 60% of customers are non-Muslims.
Even here on the mainland, regular banks too are providing Islamic financial products to attract both Muslims and non-Muslims. As of now, there are already 6 banks offering these services, making competition in this sector even stiffer. Now that more banks offer products that comply with Islam, it's also widening the opportunities for people to access financial services. And in turn, that's helping boost financial inclusion in the country.
What are the challenges for commercial banks offering Sharia law compliant financial products? Is there a restricted set of mortgages or pensions? Will Islamic financial products suffer in comparison with the diverse range of conventional banking services? To find out the challenges for commercial banks, I sat down with Badlisha Abdul Ghani, the Chief Executive of CIMB Islamic, based in Malaysia, and Toby O'Connor, Chief Executive of the Islamic Bank of Asia. So if I were a customer coming to your bank, what kind of financial products would you have on offer?
CIMB Islamic is a universal bank. We offer consumer banking products, wholesale banking products, as well as asset management.
So basically, anything you would get if you just walked into a bank, except the products are Sharia law compliant.
That is very correct.
What about you, Toby? You run a bank which is a different type of bank. You cater mostly to businesses.
Our model is different. We're a merchant bank model based here in Singapore with strong connectivity with the Middle East. So we're trying to differentiate around the Middle East, Asia connectivity. Our products and services are direct investment, providing equity to support growth of companies, and then work with those companies around our advisory services, capital markets advisory. We have a Sharia compliant treasury in Singapore, and then we also work with wealth management providers as well here.
So basically, if I owned a business and I came to your bank, why would I choose to come to, say, your bank, where you are offering a partnership, because to be Sharia law compliant, versus, say, next bank down the road if I wanted to grow my shop?
We position ourselves as a good partner to other Islamic banks as well as conventional banks. We have a good mix of conventional Islamic skill sets within the bank. Based here in Singapore, we don't win business purely by being Islamic, far from it. We compete with the conventional banks and work with the conventional banks. So a company often will choose us because we bring something a little bit different than perhaps a private equity fund would bring. We're a medium-term partner. that's not only investing, providing capital to help the company grow, but also potentially helping them grow their business in the Middle East or bringing other investment banking skill sets to their business.
Same question to you in terms of if I was a consumer and I was choosing between, say, your bank that offers Islamic finance products and, say, just a conventional bank. Would I get the same variety if I was looking for a mortgage than, say, if I went to a bank next door?
We do business, Islamic finance business, across 20 different jurisdictions. And when customers come to us, they simply look for value, right? Value for money at the end of the day. And when they come to our bank, they get the same kind of products that carries the same kind of value proposition that they would get in any conventional bank, anywhere in the world. And the most important thing at the end of the day is the differentiated delivery of those products.
Toby, I mean, when you are, say, competing for business from businesses, you know, do businesses look at you and say, well, I'm not a Muslim business. It doesn't really matter to me if you are Sharia law compliant. Do you come across that, or are you catering to different Muslim and non-Muslim businesses in different jurisdictions as well?
We're trying to capture the most attractive business that we can, that also works within the guidelines of the bank. When you look at the different types of customers that we've got, there are many that would compare us to a conventional product offering and choose the best one. Price, efficiency, who's sitting in front of me, those are all important considerations. Banking is very competitive. It's a very competitive environment in Singapore. When you look at the wealth management sector, that's interesting. That's going to be more Islamically driven. There's a lot of growth within that sector here in Singapore. A very small portion of that right now is Islamic. Increasingly, that Islamic component will grow. So somebody might come to us, or a potential conventional asset manager may come to us and say, we'd like your support in advisory services or distribution services. That's more Islamically driven. But the core business, the merchant banking business, the advisory, the direct investments, that's very much competitive with conventional. But our key differentiator there, in a lot of cases, is our ability to work with those companies on the ground in the Middle East, or Middle East companies looking for access into Asia.
What are the main obstacles to expanding, say, your business in new markets?
Whenever you go into a new jurisdiction, you need to have the enabling framework for those regulated activities to be undertaken. Aside from regulation, we need the right and appropriate legislation.
Toby, do you ever come across people who say, oh, well, actually, I don't really want to, I don't know what this is. I don't know what Islamic finance is, and I just don't want to deal with your bank. Do you come across that? Because could that be an obstacle to, say, expanding your business?
You rarely come across somebody who says, I don't want to use the bank, but there's definitely an education process for first-time users. But what you find with sophisticated companies that are operating cross-border, big companies, very sophisticated senior managers who are going into new markets. They're going into Africa, they're going into the Middle East, they're going into Asia. These are their growth markets. And they're not just thinking about their top line, they're thinking about the evolution of their capital structure. They're thinking about, maybe I should issue a sukuk, the Islamic equivalent of a bond. And that diversifies their investor base. That shows a willingness to embrace the culture and the environment that they're going into. And that will be an attractive product potentially to conventional investors, their existing conventional investors, as well as new ones. And that's very positive. And as we see the development of the cross-border capital markets environment, it's very important that the conventional investors are brought along with the developments on the Islamic capital markets, and you're generally seeing that.
That was Badli Shah Abdulghani and Toby O'Connor. There's significant potential to develop Islamic finance outside of the Middle East. International financial centers ranging from London to Singapore are aiming to get a piece of the market. That's all we have time for. Check out our website and me on Twitter. I'm at Linda Yueh. And join us next time for more Talking Business with me, Linda Yueh.